Do you truly know who is looking out for your money? Whose side is your financial advisor really on? Is it yours? It absolutely must be yours. This is all about trust, people. It is about your hard-earned money. Your entire financial future can depend on it. You need to know. You have a right to know. So listen up, because this is important. Fiduciary duty, it sounds like a big, complicated term, but it is actually very simple. It means someone legally must act for you, and only for you. They must act in your best financial interest, not their own interest, not their company's interest, yours, period, end of story. Think about who this applies to. A financial advisor, a good one, should be a fiduciary. Many are, but you must ask. Or think of a trustee. They manage money in a trust for beneficiaries. They have this critical duty. Even corporate directors have a fiduciary duty. They must act in the best interests of the shareholders. Why is this duty so incredibly crucial? Because it is the bedrock of your financial safety. It is the foundation of the client-advisor relationship. Without it, everything can fall apart very quickly. Your trust can be shattered. Your precious money can be put at serious risk. A fiduciary duty is like a sacred promise, a promise to protect you. Your fiduciary has a very big job. Their main responsibility is to protect your money. They must invest it wisely and prudently. This means no reckless gambling with your future. There should be no foolish, high-stakes risks. Your financial security must always come first, always. No exceptions. This is their solemn obligation to you. This is fundamentally about ethics. It is about doing right by you. It demands complete loyalty to you, the client. It requires the utmost care with your funds, and it means always acting in good faith. Imagine they are handling their own mother's life savings. They should show that level of care, or even more, because it is your money, and you are counting on them. Their ethical compass must always point towards your best interest. Transparency is absolutely key. There can be no secrets. There should be no hidden fees or surprise charges. You must know everything about how your money is managed. How much are you paying for their services? Are there any potential conflicts of interest? They must tell you all of this clearly, simply, and upfront before you commit. You have a right to full disclosure. This duty ensures ethical management of your investments. It essentially forces financial professionals to do the right thing. It compels them to put your interests ahead of their own. This helps to discourage bad or self-serving advice. It stops them from recommending products just to earn a higher commission. It promotes honest and ethical behavior in the financial industry. All of this is for your benefit, for your financial well-being. It is your shield against unethical practices. Now, you need to be careful here. Conflicts of interest can arise. Sometimes an advisor might get paid more money, more commission for selling certain financial products, even if those products are not the absolute best for you. This is a major conflict of interest. It creates a situation where their interest might not align with yours. This is a big flashing warning sign. It can seriously hurt your financial progress. What happens when such conflicts affect decisions? The impact can be devastating to your finances. You might end up with unsuitable investments that don't match your goals or your risk tolerance. You might end up paying much higher fees than necessary. Your money might not grow as it should. This is your nest egg we are talking about, your future retirement. Don't let conflicts of interest harm it. So, what are the red flags you need to watch out? Is your advisor avoiding clear talk about their fees? That is a red flag. Are they pressuring you to make quick decisions? That is a red flag. Are they suggesting investments you do not understand? Red flag. Are they promising unusually high or guaranteed returns? Big red flag. If it sounds too good to be true, it almost always is. Trust your gut. If something feels off, it probably is. Pay attention to these warning signs. What if you suspect a breach of fiduciary duty? You must act. Do not just sit there and hope it goes away. Start by gathering all your documents, your statements, your agreements. Collect any notes you took during meetings. Write down all your concerns clearly. Then you need to talk to a qualified lawyer, one who specializes in financial misconduct. Get professional legal advice to understand your options. So, how do you protect yourself? You must empower yourself with knowledge. Do your homework. Research any potential advisor thoroughly. Ask them directly, are you a fiduciary? And then get their answer in writing. Do not just take their word for it. Check their background, look up their credentials, verify their history with regulatory bodies. This is your responsibility. It is your first line of defense. Taking these steps is crucial for your protection. Next, review all agreements very carefully. Read every single word before you sign anything. Understand what you are agreeing to. If you do not understand something, ask questions, ask again, and then ask again if you need to. Keep asking until everything is crystal clear. This is your right. Do not be intimidated. It's your money and your future on the line. Get second opinions. Do not ever be shy about this, especially when you are making major financial decisions. Talk to another qualified and trusted financial expert. A fresh pair of eyes can provide a new perspective. It can help you spot things you might have missed. It can save you from making a costly mistake. It can even help you make more money. It is simply a smart thing to do. You must understand fiduciary duty to protect your future. Knowing your rights is power. It allows you to take control. If you believe there has been a breach, report it. You can report problems to organizations like FINRA or to the Securities and Exchange Commission, SEC. There are resources available to help you. Websites like investor.gov and the CFP board offer great information. Remember, your financial security is ultimately in your hands. Be proactive.